right. Welcome everyone. Welcome. Welcome to the Saturday night live stream. Thank you guys so much for joining in. Glad to see that there's already likes. Wow. Already 3 likes. Or no, wait. 4 likes before I even started. Thank you guys. Let's see if we can get to 10 likes tonight. Let's see. There we go. What's up? Good evening. Hello. Welcome guys. Thank you so much for stopping by. You guys are the best. So, okay, there we go. All right, so we are going to talk about what we should be expecting next week. So first of all, let's kind of review what happened. Okay, so last week we continued to make higher lows and higher highs. Very different structure compared to early to mid February. I told you guys this, right? So again, the reason why I'm pointing this out is that in early February to mid-February, we had lower highs and lower lows, which is indicative of a weakening uptrend. So when we have a weak uptrend, that tends to fail, right? The uptrend tends to fail and we get an official reversal to the downside. And guess what? That's exactly what we did. Plus, February's seasonality, when we tend to reverse, near the end of the month occurred. And then we continued to move lower during March and we hit March lows. And from that point forward, we haven't looked back since as we continued to make higher highs and higher lows. And what's important about this specific area is that currently we're making higher highs and higher lows exactly at the previous area where we've seen that lower high and lower lows price movement. And guess what? If you guys go back, right, to the same area, okay, we've actually had an instance here where we made lower lows and lower highs, like you see here. This one specifically, we've made lower highs a lot more than lower lows. And so that ultimately allowed us to see a big break to the downside. And I believe this is when May CPI came out last year. Now, what's interesting as well is that if you look over here, okay, so this specific area, right, okay, let's get a little closer. There's a lot of lines, I apologize about that. So what TradingView does is that it coincides every single major level that I draw onto any intraday time frame to all the daily, weekly, and monthly time frames as well, which is why you have so many lines here, or you guys can see so many lines here on the daily time frame. Okay, now what's interesting about here is that we created this higher high and higher low structure, this uptrend structure, in the same area that we've kind of chopped around in, right? So 406 to 413, 414. And what's amazing is that we continue to move straight up higher, squeezing every single short here, right? And we did not even care to allow the 21 SMA to even catch up. So this tells me that there is a possibility that we can reach our ultimate, well, my personal price target next week to 420, right? And the only reason why we went to 426 here, as seen here, is that we're still underneath the daily 200 SMA. And usually when we are staying underneath the 200 SMA and we're in a very strong intermittent uptrend, right? And the reason why I say an intermittent uptrend is that, well, we tend to get very large bounces during a macro downtrend or during a bear market. So with this bear market condition, we tend to get very large intermittent bounces. And so this created this very magnetized run towards this daily 200 technical SMA. And that's the reason why we went all day over 420 and ultimately hit this high pivot point of 426.37. Now, if you guys remember this part right here, and we kind of translate what we just learned in that area towards this area here, it makes sense that 420 could be a very viable and logical price target for an uptrend here so far, well, this intermittent uptrend. And so again, I'm going to expect a pullback, right? But I'm not expecting a pullback just yet because of the fact that we've been defending this daily 10 SMA so well. And also, we're not that far away from the 400 psychological level, right? It's only been, let's see, a little over almost 3 weeks here since we've gone over 400. So, it's only been a very short amount of time since we've broken above the $400 level. So there is no reason to come back to it right away because again, the bulls are in favor here. They have the control over the price trend and price action. And so Friday's actual price action led me to believe that yes, and it confirmed to me that okay, bulls are really here to fight to make sure that the trend is trending to the upside and we don't have any type of break to the downside where we create this lower high and lower low textbook downtrend. So this is important, guys, important for you guys to understand, right? So this area back in mid to late July, okay, to I guess actually late July to early August, right? And compare the areas here, right? And that's the reason why I always tell my one-on-one mentorship students to always go back to the previous data points, right? I don't want them to look at it as just technical analysis. I want them to look at every single area as a data point. And it really helps you change your perspective or your internal bias that you may have had coming into the markets. And so hopefully you guys remember the words that I am saying, because it's very important for you guys to remember this. Now, what you guys see here, okay, with that information in your head, we're having this higher high and higher low uptrend. With this uptrend, I again expect to see a profit target to 420. And if I take out my levels here again, my 21 SMA is finally caught up. If you guys remember from the previous live streams, the 21 SMA was still staying below 400 and it was sitting around 398 or even slightly below 398. And that made me fear for the potential break of this uptrend to the downside, because there is a chance, there's always a chance during an uptrend where the price can actually break below the daily 10 SMA, come back down to retest the 21 SMA and risk the buyers here for sellers to start coming in and getting a little bit more confident. And the sellers might say, okay, well, the buyers have lost the daily 10 SMA, then there's a chance for us to push out the buyers right at the daily 21 SMA and push the price lower, eventually turning it into a new downtrend. So a reversal to a downtrend, right? So an uptrend reversal to a downtrend. And that's what I feared. But based on what we've been seeing on the 10 SMA for the past 5 trading days, 5 consecutive trading days, so 1, 2, 3, 4, 5, we've continued to defend the daily 10 SMA, and this has allowed the daily 21 SMA to finally break over the psychological $400 level, and it converged on the daily 50 SMA and has finally crossed over the daily 50 SMA. So this is what we call a bullish crossover. When a small SMA breaks over a larger SMA, that's what we call a bullish crossover. And if the opposite happens, right, if the smaller SMA crosses below the larger SMA, we tend to get a bearish crossover. So very, very simple technical terms to kind of use for your advantage there. And especially, if you guys are using moving averages, whether it be simple moving averages or exponential moving averages, it doesn't matter. All that matters is that you guys understand that bullish and bearish crossovers do matter. And so obviously any indicator is lagging, right? My SMAs are lagging. However, they tend to provide very, very short-term supports and even long-term supports as well whenever we are in an uptrend. How do I know this? Well, the evidence is right here in your faces. So I continue to expect next week as an uptrend, especially as the 21 SMA continues to catch up. And I love the fact that we have allowed the 10 SMA to catch up since it has gone a little bit too far away about 2.5 weeks ago here, or 2 weeks ago. And that's the reason why I was so accurate a couple of live streams ago with the price action, telling you guys that we're going to see a pullback, consolidation, sideways movement, and then a retest of the 10 SMA and a continuation to the upside. Now, obviously on CPI day, when March's CPI inflation data came out, I was a little bit worried because there was a potential for us to make a double top. And so when we had this nice bearish run and a sudden jump in bearish volume, I got a little bit skeptical on a potential continuation to the upside. But on Thursday of last week, we had an amazing short squeeze. We took out people who were short overnight, or people who carried over their internal bearish bias to Thursday, right? From Wednesday to Thursday. And that caused a continuation of the price to the upside as we continue to squeeze out every person who is trying to hold on to their short positions. So this has caused a nice higher high from the previous high of the day, the PHOD. And then on Friday, we got a little bit of a calming down, is what I would call it, of the price action as we hit major areas of supply as seen in the early to mid February price action right over here. So where is that supply area? Well, very easy to spot. 413 to 414.50. So between these two whole number levels, we have a huge area of supply. How do I know this? Oh, take a look at the data points here. These candlesticks tell me, right over here, these three tell me that there is a somewhat of a huge supply area where sellers are continuously slapping the price down. And then over here, we continue to see the price not being able to break over 412. Okay, 413 to 414.50. So this tells me that again, we're not able to break over this 413 level, especially this wick here, this top wick, and eventually we weren't even able to come back to this 413 to 414.50 supply area, and we absolutely crushed to the downside. And we also got this 10 SMA crossover to the downside, making it a bearish crossover, which is exactly what I talked about a few minutes ago. Okay, so that's what I want you guys to look at next week. I gave you guys an extensive breakdown, so make sure you guys take a look at your own daily SPY charts and do your own analysis on there, do your own due diligence. But again, make sure you guys use my levels here, use my analysis, use my data points that I pointed out for you guys. And again, if you guys are just joining in, make sure you guys go to around the 5-minute time mark on the video here, on the recording of the live, and start from there, because that's when I start to speak. Okay, so now I kind of want to go over the US dollar. All right, so the dollar has been on a nice downtrend after it hit a peak back in late September, right? And I called this as well, right? I told you guys that we're gonna start making lower highs and lower lows on the US dollar, right? And we've been going to the downside ever since. Okay, I called this for you guys. You guys should remember. I told you guys to watch for the US dollar. It's going to start pulling back, and we did that, and we've been doing that ever since. And so, what's concerning about the dollar right now, though, is that we are at a supposed support area. Okay, and we're around this 100 to 101 value of the DXY here. And if you guys want to look at the actual stock that you guys can trade, this ETF here, right? This is the US dollar index bullish fund ETF, right? If you guys want to be playing any type of longs on the US dollar or any shorts against the US dollar, you have to look at this one, UUP, right? But you have to base it off of what's happening on the DXY, right? And I'm going to take out the SMAs here because they don't really help me here. Okay, so obviously the SMAs are showing a downtrend because the candlesticks are showing a downtrend. So no real use for that. Now, what's concerning about the US dollar here is that we may start to range between 101, okay, let me just round up to 101 to 106. I'm also going to kind of round up here. Okay, so 106. But if you guys want to be specific, all right, I would say 105.50. Okay, if you guys want to be specific, I can also do that as well. 105.50. Okay, so the only reason why I say this is that based on a technical perspective, okay, we are making a potential double bottom. So we have our first bottom here, the left one, and then we also have a right bottom potentially forming from last week's price action. Now, the only way that we can confirm this is that we bounce and we head back towards this 103 resistance level. And if we break this resistance level, then there is a high probability or high chance that we can start range trading between this 101 to 105.50 area. So 101 is the immediate support and 103 is the immediate resistance, and then 105.50 is the macro resistance level. Okay, again, you guys can also say 101 is the macro support and 105.50 is the macro resistance if you guys want to look at this in a long-term perspective. Now, I've been very, very accurate on DXY here ever since I started looking at it last year in mid-May, right? So you guys can see all the chart patterns that I've pointed out here, and it's all come to fruition, right? Even this bearish bull flag, even this descending channel, which ultimately I told you guys, you know, the DXY or the US dollar has peaked here because of the fact that we've risen so much since the lows back in 2020, right? I believe when right over, no, excuse me, 2021. The lows of 2021 when we kind of bottomed out here. So it was a meteoric rise, and now we're coming back down. All right, so we're creating this mountain peak, and then we create the valley next. All right, after the mountain peak here. So something that you guys should be watching out for. Again, I told you guys that the equity markets are kind of moving away from depending on what the dollar is doing, what the bond markets are doing, what gold is doing, right? Any of the other commodities, right? Oil or the entire energy sector, it's not really following that anymore, right? We're slowly desensitizing against every single important economic data that we were so sensitive to back in 2022. And so this is good, right? This is good news. But there's still always that little intermittent kind of, or the short-term perspective or time frame where the market can become slightly sensitive to all these different data points like the US dollar. So continue to watch the US dollar, and the next thing that you guys should be looking at is the VIX, the volatility S&P 500 index. Okay, so what's interesting about this one is that the VIX hasn't gone anywhere, right? If you take a look at VIX and compare it to SPY on its down days, right? VIX has also been going down on the same days where the S&P 500 has been in the down day. And that's particularly interesting because that means that fear is completely exiting from the markets, right? Because the VIX is talking about fear in the equity markets, in the overall equity markets, right? It's telling you how much fear is in the market. And even if we're going down, on the S&P 500, and even if we end the day down and negative in negative territory, the VIX continues to trudge lower. And that particularly means, right? In particular, that means that people are continuously buying every single pullback, every single dip in the market. Okay, and I pointed this out a couple months ago as well, right? Where the market breadth has been so strong during pullback days, right? And I wasn't scared, right? Because of the market breadth and how strong we're holding every single significant support, right? Even if we broke a intermittent support, we came back down to hit a very significant support, and then we bounced off of that, while the market breadth continued to stay strong instead of getting weaker and weaker and weaker. And that provided me enough confidence that the market should continue to run up higher. And that's the reason why we're seeing the VIX below the value of 20, right? And we were looking at this 20 level as a resistance for quite some time, for more than a week here, so around 1.5 weeks. And ultimately, we rejected this value of 20 on the VIX, and we broke down. And my next logical target here will be 15 to 14.80. Okay, so the values of 14.80 to 15 is going to be a target for VIX. Make sure you guys have that in mind. And that means SPY, the S&P 500, can definitely reach 420. If you guys kind of want to translate that to the SPX, okay, the S&P 500 index here, I would say 4195 to 4200 is the area that you guys should be looking at. Or if you guys want a more of a maximum, complete maximum macro target, I would say 4225 will be your ultimate maximum macro price target. And the reason why I say that is that, well, if we reach 4225, we would have finally closed this gap down that we never closed. Never filled. All right, we just gapped down and we just pushed lower. Nothing happened. Nothing else happened. All right, we just continued to move lower after that. And so hopefully people who trade SPX can see this, all right? And you guys can put this on your own charts, because if we reach 4225, that will confirm for the long term that bears should be out. So anyone who is short right over here should be completely stopped out. They should be squeezed out. And there could be a potential reaction to the top side once we retest 4225 and potentially start peaking over 4225. All right. Does anyone have questions on what I've been saying so far during this entire live stream? I just gave out such important information. So if you guys are watching this as a recording, make sure you guys go back to that 5-minute time mark, all right? And watch from that point forward and continue to watch and listen. Okay, I give you guys very, very important technical analysis on SPY and the overall markets and where we could be heading. And so again, the only reason why I showed you guys the DXY and the VIX is that people continue to look at it, even if the equity markets are continuously desensitizing to any significant data points from the dollar, from the bond market, from the volatility index, and etc. All right, I've been saying this since mid to late December of last year. All right, I've been saying that. I was seeing signs of that. All right, well, it seems like no one has any questions. Well, it's a Saturday night, so I will let you guys all go. Thank you guys so much for watching. Again, if this information has been very, very helpful, especially for people who are watching this live stream as a recording, make sure you guys give me a like down below, and make sure the most important thing, okay, is to translate every single thing that you guys learned in this live stream to your own market charts. Okay, and make sure you guys have the same levels that I am watching as well, because those are significant levels. All right, those aren't just arbitrary subjective levels that I'm looking at. Those are significant levels that have been retested multiple times and have been broken multiple times as well. Okay, so make sure you guys do that. Adriana, thank you so much. Thank you so much for coming in tonight. And of course, you're welcome. All right. Have a great rest of your weekend. I might go live again tomorrow night. I'll let you guys know. Make sure you guys are following all my social media as well at ChartsFocus1. Okay, and if you guys aren't subscribed to the YouTube channel here, make sure you guys hit that subscribe button and make sure you guys have the notification bell on to know when I am live. Have a great rest of your evening, and I'll see you guys next week.